try and look at the emerging economic landscape and the challenges it faces, especially the challenges that emerge beyond the borders, both state borders and national borders. So, Shamika, let me start with you, not merely because you have to catch a flight, but you're the one connected with policy over here. So, how do policymakers view the emerging economic challenges? If you can briefly outline which are the top 3 challenges that policymakers are looking at.
So thank you, Latha, and thank you to SBI for this opportunity. It's always wonderful to get out of Delhi. You know, the EAC is perhaps not a very well-known body in terms of how we work. We basically report to the Prime Minister and the PMO. We are not outward-facing, so a lot of the work we do is really for internal consumption. We do not work with states. We do not work with ministries. So basically it is a role where we think and we deliberate and we give real-time input where required. And we often get asked to do very specific work. So let me tell you in terms of some of the key areas where we are focusing right now. The one which is at least on top of my mind is the situation with the state finances today. And it is a precarious situation because the electoral politics basically lends itself to a race to the bottom sometimes. And we have seen, if you look at the state spending and the nature of the spending over the last X number of years. So see, unlike public finance people who are on the platform with me, as an empiricist, I have the luxury of not looking at it from a very precise deficit concern. I look at it much more from the point of view of where is the money going and is the allocation efficient. So if you look at the non-development to the development spending of several states, it's becoming troublesome. One state, of course, has also gone to the Supreme Court, claiming the center is wrecking its finances and so on. But, you know, the data is where we have to look, and I strongly encourage, to those of you interested in this, we put out a report in May. It's called the State of the State Finances. What it does is it looks at 30-year real per capita trends. And there you see certain things emerging very clearly. Within the non-development spending, pensions, administrative spending, and of course interest and debt burden. And I think the last category is of specific interest to this room. You see, not all states are equally credit-worthy if you see their conduct and their spending, which lends itself to 2 policy intervention. One is from the point of how do we make them better disciplined? What aspect of policy will make states more responsible and spend in a way which is sustainable, right? The second is supporting states with better management practices itself. That is a different role. So there is a function here for the 16th Finance Commission, and then there is a function for a body, I would imagine, like the Niti Aayog, because we have a state support unit there, where states are basically told that, look, this is the way administrative burden has been brought down, or this is the way a particular state has managed. The second is, in terms of the green finance that Sachin, was talking about, we need financing for many of our SDG goals. Climate is one of them, and I think with the social stock exchange coming into being, we of course have to populate it, not just with institutions but also finances. We need better instruments, Latha, and I think that is where industry has to support. We really need to go beyond some of the obvious ones. The third is of course the skilling gap. We know, and I don't know how many people in the room know, that our most educated people in the population are nearly 5 times as likely to be unemployed as our least educated people. And this is particularly true amongst the youth, people under 30. So the fact that, and simultaneously industry is also telling you finance is not the constraint. Human resource or skilled manpower is our biggest constraint. The 2 things coexist, basically skilling is required. But one of the constraints in skilling and expansion of skilling program is credit. We really have, in the priority sector, got to prioritize even within that on skilling and certain revenue models which are working. And lastly, not because I'm a woman and I want to pay lip service to it, but what Sachin also mentioned, women-led development and what it means. In the government, we are actually we're coming up with a care economy strategy. Women's labor force participation in India, if you look at the last 5 PLFSs, it is rising. but it is nowhere at the level where we want it to be. But women are getting more and more skilled than ever before.
Let me just expand the border of the topic, because it's the given topic. It says beyond borders, navigating the economic challenges. Now, beyond borders, the first challenge that is staring us in the face are the geopolitical challenges. Professor Chakraborty spoke about the way in which we are trying to get the global south together, but the reality is that geopolitics is divisive, and it is probably going to eat into global productivity, global trade, and therefore global GDP. I mean, even if you look at the GDP growth, global GDP growth in the 2000s, the first decade, and the last 10 years, it's a fall of about at least 1 percentage point. We were ranging well over 4% in the first decade, and now the average, this year, of course, the IMF forecast 1.9%, but it could be, even on an average lower. So, Professor Seal, really that question to you. Is the biggest challenge going to be to try and gain more market share? Because the pie is not growing like the way it grew when China was harvesting its economic dividend. At the moment, do you fear that the global trade pie itself is shrinking? And if it is, how do we gain a larger share?
Yeah, of course it is. The reason being, if you see, Europe is in a recession. So, if you see our exports, especially if you want to capture the pie, global pie, so we are depending only on US. So, at this moment, that is the only market. And when China was growing, we cannot compare our infrastructure with China. There are a lot of discussion on infrastructure. But, so recently we have done a project for shipping industry. So, because during the COVID, there was a total supply chain, disruption. So, today only I read a report that, bringing steel from Rotterdam Port to Mumbai cost less than bringing steel from Jamshedpur to Mumbai. But if you talk about goods, cargo which comes in container, that is not the case. Because all over the world, the transportation cost has drastically gone down, and that is one of the major reasons for the development of international trade. But at the same time, if you see recent times, especially after COVID, there is a huge shortage of container. So can India manufacture container? Our total production per year is 10,000 units. China, the largest factory, produces 2 million units per year. Cost per container in India is, the lowest can be 4,100, somewhere around $4,100. China, it is $2,300. So this is the difference. So if you want to take the pie, you have to be competitive also, number one. So we have a scope, we have an advantage. And definitely, I also believe in hopes. So it is not that we cannot do it. Definitely, pre-lunch session, Mr. Shanal pointed out that definitely we can, try. And if we try, definitely we can do it. And we can also take the advantage of demographic dividend. And we are, especially State Bank of India and all the other public sector banks, they are also doing a lot for the, especially for MSME financing, and MSMEs are backbone of any country. So if you see 90% of our exporters are MSMEs, okay, but their total volume might be 10%. So if you want to take the, a larger share, so the most important thing what you need to do is to train the MSMEs, to make them understand that we need to export, and we need to export for our survival.
Let me come to the internal macros. Professor Bhanumurthy, and you were closely involved with this in the capex cycle that the government has tried to kickstart impressive rise of 30% in government capex in FY24. But we don't see early signs of it handing over the baton to private capex. And we can't be a 9% fiscal deficit for long. I mean, we could have taken the liberty this year, but in FY25, it has to come down at least to 8% or, thereabouts. So is that one of the big challenges? private capex taking over from public capex?
Yeah, I think when we did this analysis, we expected that, when there is a public capital expenditure happens, and there could be some kind of crowding in impact on the private investments. But I think the way it happened for the past 3 years, I think the private sector seems to be still expecting much more investment coming from the government sector, both from the center as well as states. So there seems to be some kind of a hesitancy from the private sector to pitch in the part of the whole recovery process. But as you rightly pointed out, I think the story of the only one engine working for recovery process may not last long. And I think you need to really revert back to your original FRBM Act, and you need to bring down your fiscal deficit as they plan to bring the fiscal deficit to 4.5% by 26. I think that should give space for the private investment. So, I mean, there are some initial indication that, private investments are picking up. But I think still, in a way, if you look at the investment is not just a function of public investment or the interest rates, but I think it's a long-term perception of the overall economy. Right now, I think India is better placed compared to any other countries. I think we should be looking at more both domestic private investment as well as FDI in the coming years.